QuickBooks Pro Plus Desktop 2022 financial reports generated from the use of bank feeds. Get ready because we bookkeeping pros are moving up the hilltop with QuickBooks Pro Plus Desktop 2022. Here we are in our bank feed practice file going through the setup process with the view drop down, the open windows list on the left hand side, company drop down, home page in the middle, maximizing it to the gray area. Reports drop down, we're going down to the company and financial, starting with the balance sheet standard. Customizing the balance sheet standard, we're going to take the date range this time, starting from, we're going to say 09, let's say 09/01/21 to 11/30/21, and then fonts and numbers. I'm going to change the font size, bringing it up to 14, and say OK, and yes please, and then OK. We're going to go to the reports drop down again, company and financial. Take a look at the profit and loss date range. We're going to say 09/01/21 to 11/30/21. Customize that report, fonts and numbers, changing the font size. I'm going to bring it up to 14. OK, yes please, and then OK. And then we're going to go to the reports drop down again, accounting and taxes trial balance. And I'm going to change the range from 09/01/21 to 11/30/21. And hold on, 11/30/21. Customize that report, go into the fonts and numbers, changing the font size up to 14 again, OK, yes please, and OK. So these are going to be the three reports that we kind of look at first of all to construct. These are the financial statement reports. So when you're thinking about building something in terms of the financials and entering data into the system, you're primarily thinking first about the financial statement reports, the balance sheet as of a point in time, the profit and loss or income statement at the time range. The trial balance basically puts the balance sheet on top of the income statement, uses the debits and credits, but even if you're not familiar with debits and credits, it's nice to look at this report because you got all of the accounts in essence on the major financial statements that are going to be listed one on top of the other without the subtotals, and you can kind of check and see what is happening a little bit more quickly with a little bit less long of a report and not having to kind of bounce back and forth between the two reports. Now, I'm going to start with the balance sheet and just note that we constructed this basically by saying that we're going to take this information directly from the bank feed. So in other words, if I go to the home page here, we didn't have a full service system for the most part where we're going to enter invoices and then the receive payment and then deposit and then check it to the bank, or where we're getting paid at the same point in time with a sales receipt and then deposit and then check it to the bank. But rather, we kind of waited for everything to clear the bank, and then basically we created our information from the data directly from the bank feeds. So in that instance, we can still create basically our financial statements from that, as we've done for the most part here. We deviated a couple times, and this is going to be our information. Now, note when you do that, you're going to have a starting point. So one thing you want to be careful of is that when you draw the information in, for example, on the balance sheet side of things, which reports where we stand as of a point in time, and all I'm going to do is draw in the data. So the data is going to be what has happened, which is going to be used to construct the ending balance. So as we saw with the checking account, when we then had to go back in there and put the beginning balances in place, when we did the bank reconciliations as well as the credit cards, in order to get any data, any prior point in time information, the starting points in place as of the point in time before we started drawing data in, which you typically want to be doing like before the year that you started. In other words, if you're a calendar year company, you probably want to start your data input as of January and then have that be your cutoff and start there going forward. If you had anything that was on the books before that point in time, you're going to have to enter the beginning balances as we in essence did when we did the checking account, because you're only going to get the activity that is going to be in place from the time period that you're pulling it in, and that means you need the beginning balance. Also be careful if you've used other type of software, which is like financial type of software. There's other software that can pull in basically the ending balances, meaning you could get software that basically pulls in the balance sheet that takes the ending balances from your financial institutions. That's different than an accounting software it's just going to tell you where you stand as of a certain point in time. The accounting software wants to pull in the activity to create the ending balances. That's in essence what a QuickBooks type of software is doing. So we had to go in and enter the beginning balances. And you're going to have a similar kind of thing if you had other beginning balances. So if you had like equipment on the books, you're not going to see the equipment on the books unless you purchased it through the time frame that it cleared the checking account and then put it on the books as equipment. So if you have equipment that was on there from a prior period, you're going to have to enter the beginning balances. We've got some courses just on QuickBooks in general, just the general data input for QuickBooks, that you can get into that concept of how to enter the beginning balances in a bit more detail. If you've got any other liabilities like loans or something like that you took out before the range that you're working on, meaning you didn't have the loans hit your bank statement, then you're going to have to do the same kind of thing. You're going to have to put those beginning balances on the books because they're not going to be going through the bank statement as of the point in time that we're looking at. So that's one thing that you kind of want to consider when you're constructing your books directly from the bank feeds. Did you have beginning balances that you would have to then populate here into the balance sheet, kind of manually? And you can go into our QuickBooks general kind of course to take a look at those beginning balances. So then if you go into the checking account here, the things that are going to be hitting the checking accounts will typically be just deposit and check type forms, because we made this directly from the bank feeds. So we're not going to have then forms that, if we go to the home page, the things that could possibly go into the checking account, we could have a received payment that goes directly into the checking account. We could have the sales receipts that go directly into the checking account. And we could have these two then deposited with a deposit form, the other side coming from undeposited funds, if we were using a full service kind of system, as opposed to taking the information directly from the bank feeds. Over here, just note that we got basically all deposits that are taking place because we're pulling them directly from the bank feed, and nothing's going through undeposited funds because we don't have that undeposited funds kind of issue there. So that's one thing to note on the check side of things. If I go back to the home page, notice we don't have any pay bill information because we didn't enter the bill, didn't go through accounts payable. We just have like normal checks that are going to be coming out because we entered this information for the most part directly from the checking account. We also don't have any other kind of special kind of checks like the paychecks or anything like that, because if we had the payroll and we just used the information as it cleared the system, it would just be a normal check form because we entered it with basically the bank feeds instead of matching it out. So that's going to be the transaction in the checking account. Now this transactions, all this checking account data, the other side of all these transactions need to go somewhere else using the double entry accounting system. And that's what helps us to create the rest of the financial statements, most of the rest of it being on the income statement, the activity, the income and expenses. So if I go back to the balance sheet, the couple other accounts we had here, the PayPal, we had the beginning balance issue that's going to be dealt with that. We wouldn't have any accounts receivable if we were just using the bank account to clear, because we wouldn't be recording the invoices in that instance. We had a couple where we just practiced recording an invoice to see what would happen, but we wouldn't have any accounts receivable on a cash basis, and even further from a cash basis to one where we're just reliant on the banks. And then inventory is also kind of an issue that oftentimes you would have to go to more of an accrual system, as we talked about. So if you were reliant on the bank feeds, you might not have the inventory in the same way, at least. And then we've got the investments down here. The equipment is another one where if you're buying equipment, then we can use the cash to put the equipment on the books. But note that if you buy equipment and finance the equipment, then you got loans that you could have a non-cash kind of transaction, and you'd have to make sure that you're recording those, which could be a little bit more difficult considering they're financed transactions and won't be going through the bank feeds. The credit cards, we basically constructed that from the bank feeds. We got that beginning balance kind of issue that we would still have to put in place, but that's from the financial institutions. Any loans can be a little bit tricky because you got to make sure that the loans are going through the bank feeds. If they are, then you can record the loan at that point in time. If you're not getting the cash directly through the checking account, then you got to make sure that you're putting the loans on the book. The equity should basically build itself out as you're constructing the beginning balances, and then the income statement will roll into the equity side of things. On the profit and loss side, we set up basically our income accounts. Any of the deposits that went through were on basically the income side of things. And then we had the expenses, basically all the checks that went through, the decreases were used to construct the expense side of things. Now, every other report that you'll basically look at here is going to be something that's going to complement some line item on the major financial statements, the balance sheet and the income statement. Some of them aren't going to be as useful when we use this kind of setup to construct our financials. So let's just take a look at some of those. If I go into the customers and receivables, all these reports basically are used generally to support a balance sheet item. They're usually used to track the receivables here. And if we go to the home page, the receivables are used on an accrual basis. That would mean we entered an invoice. If we're reliant on the bank feeds, then we're not creating invoices, and basically all those reports are not going to be useful because we won't have an accounts receivable. We don't need them. So all these reports are basically not something that we would typically be using if we're not on an accrual basis. These sales reports would be supporting all these reports, generally give some kind of support to the profit and loss numbers, these numbers here. And remember, the general rule for the profit and loss is we would like to group these by less accounts and not group them by customer or by too detailed by customer or too detailed by basically what we sell, because usually we can get supporting reports. But those supporting reports are not as detailed in this case because we didn't use the full service system, meaning normally income would go up with an invoice and a sales receipt. And if I used these two forms in a full service system, then the system will basically be able to create those supplemental reports breaking out the income line items by customer and by what we sold. In this case, we used the bank feeds and basically just recorded the deposit and then recorded it directly to income, which isn't normally what happens in the full system. The income would be recorded with these two forms. So we lose a little bit of the detail when we're relying on the bank feeds, in other words. So if I went into some of these reports, it should tie out to the total income line item, but it won't on some of them. If I go into the sales by customer summary, or let's say detail, for example, and I'll just change the range from 010121 to 123121. And so we've got some detail here because we entered some invoices and sales receipts to kind of practice, but none of the cash transactions are here because notice the type doesn't have any deposits, and the deposit form is what we used when we're depending on the bank feeds in order to record the data. So this report's not going to tie into then our numbers on the profit and loss. So we're losing some of that data, and it might not be a big deal. You might not need that data because it's going to be a lot easier if you're in a system where you can rely on the bank feeds, but you just want to be aware of that. And then the sales receipts, if we look at the sales by item, summary or detail, then I changed the range from 010121 to 123121. Then again, we had some of these because we entered a few invoices, but notice it can only pick these up if I entered an invoice or a sales receipt, and most of our items we didn't enter an invoice or a sales receipt. We just entered a deposit. So we're not going to have any items because the items are what we sell, services or goods. If I go back to the home page, and those are usually entered with an invoice or a sales receipt. If you want that more detail, then you'd have to enter an invoice or a sales receipt and then match that up to the deposits that are going through with the bank feeds. It takes a little bit more work to do that, but that would give you that more detail, which may or may not be necessary to you. It just depends on what your needs are. So you don't have that more detail there. However, you do still have, if I go to the customer dropdown and I go to the customer center, we have the information of the customers broken out by customers. So usually the data in here would be something like we would have invoices and then the payment on the invoice or sales receipts. Here, they're all going to be the deposit. So you still can get like this detail, but it's not quite, you can't get it in like the report format as easily. So, and this would only be here if when you enter the bank feeds, you make sure to add the customer in the customer field, which many people forget to do. But if you add the customer in there, which you want to do, you could still get a little bit of added detail even though you wouldn't get as much detail if you did the full system using invoices and sales receipts. So if we close that out, so then I'm going to go to the reports dropdown. Jobs, this would deal with like a job cost system. Vendors, all of this stuff deals with the accounts payable in a similar way as these deal with accounts receivable. So all those reports support the balance sheet account of accounts payable, which would be down here if you're using a reliant on the bank feed system. You won't have any accounts payable because if I go to the home page, we're not going to be entering bills and then paying them at a later time. We're simply waiting till we cleared the bank with whatever we paid with a check or electronic transfer, and then recorded it with just basically a check form. So we don't have any accounts payable in that system. If you needed accounts payable, then you would be deviating from a cash basis system, and you'd have to enter the bill and then match the bill basically to the payment. So let's go back to the drop down. So that's all of these. And then the purchases have to do with like inventory items. I won't get into that in detail. The inventory items, of course, have to do with inventory items. You would only have inventory reports if you wanted to track the inventory within QuickBooks, which again, normally would be a deviation from a cash basis system to some kind of accrual basis system. Payroll reports, if you're doing anything in payroll within QuickBooks, that once again is kind of a deviation from a pure cash basis, or at least one in which you're going to be dependent on the bank feeds, to a bit more complex of a system, as we talked about a little bit with the payroll transactions. If you're working with an outside payroll provider like an ADP or a Paycheck, then you might be able to still get away with kind of, we talked about like a form of a system of a cash basis, and then use adjusting entries with either yourself or your accounting CPA firm or tax firm at the end of the time period. But again, these reports would need to be something that kind of deviates from just being dependent on the bank feeds typically to be useful. So, and then we've got the banking information deposit. These reports are kind of supporting the deposit reports, and they should still be basically applicable with the deposits and the checks. We've got the accounting and taxes, and then of course the trial balance and the journals, which are still relevant reports. So that's going to be it. So in summary, the balance sheet will be created, but that's the ending point in time. And when you get the information from the bank feeds, you're not just pulling in the ending balances from your financial institutions, you're pulling in the transactions. Therefore, you still need to put the beginning balances so that you can then have the activity that will get you to the ending balances. That's how financial software works. On the balance sheet, the profit and loss will show the activity. Mainly, income is going to be recorded with the deposits, and the expenses will be recorded with all the decreases from the bank accounts, and it'll show the activity that will happen. All other reports and the drop downs will be generally supporting some line item or multiple line items on the major financial statements, balance sheet, and the income statement, and you lose some of the added supporting reports oftentimes by using the bank feeds, because you're not using the full accounting service process, which may or may not be of concern to you depending on your, the cost benefit analysis of the time versus the added information.